Hey everybody, it's Friday, May 24th. I keep getting my dates wrong. Today is Friday, May 24th. Yesterday when I made the video I said it was May 24th. It was May 23rd, so please accept my correction. Hey, here's what I want to talk about. And this is fascinating to me. This is fascinating to me. Wait till I explain it to you. Okay, so not long ago, maybe a week or two ago, it was in the news, it was reported that the U.S. federal government has broken an all-time record in spending. Now, that may have surprised some people, maybe it didn't. It certainly didn't surprise me. It didn't surprise my subscribers. I was telling them already last October at the beginning of the current fiscal year that this year will break a record. And by the way, I've been talking about that. I call that fiscal support, fiscal flows. That is the reason why the economy continues to expand. That is the reason why we have had this record-breaking expansion, because since 2009 we have had above 4 trillion annually, and this year it's approaching 5 trillion. But anyway, I was fascinated for the following reason. Because I was wondering, where are all the guys who were screaming money printing back in 2008 and 2009 when the Fed was conducting its extraordinary monetary measures like quantitative easing and lowering the interest rate to zero? Actually, at that time, those actions were not at all money printing. It was really money unprinting, because when the Fed was lowering interest rates, it was removing income from the economy. When the Fed was conducting QE, as I've explained so many times, it was stripping the economy of higher yielding assets. So that, and the reason why all those guys got it wrong, and you know I'm talking about the Peter Schiffs, the Jim Rogers, they're printing money, right? So now, when you really do have money printing, we're talking about 5 trillion. That is an enormous, enormous figure. Crickets. You don't hear anything. Not a sound, not a peep from these guys. Where's Schiff? Where's Jim Rogers? They're printing money. He should be out there right now going crazy. They're printing money. The deficit's going to be back to $1 trillion this year. That would be the largest deficit since 2011. But you don't hear any of these people, and why is that? Because they really fundamentally don't understand. They have it completely backwards. They have it totally backwards. Actually, when you think about the Fed does not print money. The Fed is a bank. So yes, the Fed has the ability to credit bank accounts with dollars in an unlimited capacity, but that's not how it functions. Whenever the Fed lends or puts money into the banking system, it takes something out in return, or banks have to put up capital. So when the Fed conducts quantitative easing, yes, it credits the banking system with reserves, but it removes normally treasury securities, which are cash alternatives. Those are dollars. Those are just dollars with a term and a coupon, as I've said so many times. So it's putting in one form of a US dollar and taking out another form of a US dollar. And worse, it's stripping out that income that is attached to those treasury securities. And if the Fed lends, it lends on collateral with an interest rate that is to be paid back to the Fed. All right? So it's not like the US government giving somebody a Social Security check. That doesn't come with any liability. You get a Social Security check or you get a payment from the government as a vendor, that's your money to keep. That's an addition to your financial net worth, all else equal. Okay? But when the Fed conducts its operations, yes, it may be crediting the bank account, the banking system with reserves, cash, but it is removing something at the same time, or somebody who is the recipient of those reserves, that money has to pledge some collateral and needs to pay back with interest to the Fed. The Fed doesn't write a blank check to somebody like the government can write a Social Security check. So this is real money printing. But you don't hear anyone. You don't hear Jim Rogers say, they're printing money, they're printing money, or they're printing money, they're printing money, they're printing. Or what about that other guy, Mark Faber? They're printing money, they're printing money, they're printing money. Remember him? I used to do that impression a long time ago. I forgot about him. I haven't seen him in a long time. But then again, I don't watch any of those shows. Let's just do an update on the markets. We're having a little bit of a rebound here in stocks. You have to buy this dip. What else? Oil. Yes, I wanted to talk about that yesterday, and I did not talk about it. Now, very interesting. In my reports over the last several weeks, I have been bearish based on kind of soft EIA reports, those weekly reports. They were looking weak. You're seeing inventory builds. You're seeing kind of flat demand. Refiner inputs, which is the crude that refiners use to put into their refineries, that's down year over year. So it did look a little soft. Not crazy soft, not super bearish soft, okay? But it did look like a correction was probably going to happen. The thing that is very, very interesting, if you look at what's happening in the physical oil market compared to futures, especially when you look at Brent, extreme tightness. And if you look at the Brent spreads in the futures markets, extreme backwardation. Backwardation is where the front month is trading at a premium to the deferred contracts, and that is a sign of tightness in the physical market. So, will the sell-off persist? I have my doubts. I think we'll see a turnaround and oil prices will move higher. But again, it's in the hands of OPEC, and when we say that, really in the hands of Saudi Arabia. So we'll see what they do at the meeting, which is now, I think, has been pushed back to early July. So we're going to have to wait. All right, everybody. Have a great weekend and a great Memorial Day. See you next week. Bye-bye.